Hey traders, the markets are falling since Fitch downgrades the USA long rating debt from AAA to AA plus. They said that it's because there is a steady deterioration on USA government debt and that the debt will continue to rise in the USA. But the timing, it's very interesting. It happened on August 1st. Has this ever happened before? Yes, it happened on 2011, exactly the first week of August. So we're going to analyze what happened back then and what might happen this time, how we can take advantage of the moves. Let's look at the S&P 500. This is the future contract daily chart, and we can see about 6 sessions ago, we had some sort of strong selling. And then we had a move up without much demand. We can see it on the volume. And now the selling continues because of the news. Let's go check what happened in 2011. Okay, it was very interesting. In 2011, this is what we had when that news came out that the USA debt was downgraded from AAA to AA plus. We had a steady selling since the news all the way up until the S&P 500 lost 20% of its value. Once that happened, the whales, the institutional traders, according to the chart, started buying. Okay, that's why we have these spikes in volume. The move stopped, and they entered into an accumulation phase that lasted since August 9 all the way up to October 4th. On October 4th, they did the last shakeup, taking out the loss right here. And they do that to test how much selling pressure the market still has. There was not much. Then it started a move up, then a correction around 60% of the move. And that didn't happen until November, which are the months where the institutions get rid of losers that they may want to keep, but in order to deduct the losses from their wins on the tax report, they have to sell it. So they sell it usually between October and November, usually, sometimes as early as September. And from there, we have a move up. Okay, we're not saying the same thing is going to happen, but the timing is very suspicious. October, when we start having weakness in the market because of what I said. So let's keep an eye on this move. And also, that's why we close half of our position on UPRO, okay? The ETF, leverage ETF we bought right here when we saw signs of institutional buying. Look at the huge amount of volume in the daily chart. And this happened when they orchestrated the hidden, or what it's called, the hidden rescue to the regional banks that were in bankruptcy. They threw $300 billion. Okay, that's why the whales bought. We bought here. We just closed half of the position. We're keeping half of it. We still have a profit of around $1,000 on this one. This is a leap. The option doesn't expire until January 24th. So we will keep half of the position and be looking into adding to the position once we see signs of institutional buying. Okay, and we'll do another video. Another look would be checking the weekly chart so we can see the trend line for the bear market we had last year. And this is where we had the bailout or disguised bailout of the regional banks. A lot of buying we could see by the volume, and that's where we got. That's where we bought our options. Okay, the move is definitely overextended. We can see it because the price is really far from the 20 MA. So we'll wait for a correction and probably add to the position. Okay. And this is what we have for you today.